happy 3:01 p.m. on a Wednesday here, and that rain's going to leave soon, New York day. Thank you for the last two speakers, last panel with Ashley and Louisa. That was really helpful, very relevant to my experience. We're going to take a little bit of a flip discussion here. We're going to talk about exit readiness. Exit readiness is something that in this room everybody should be really interested in, whether you're a private equity firm or a portco. And we're going to really get into this from the angle of the CFO. I've already introduced myself. I'm Dave. I'm the CEO of Consero. I'm lucky enough to manage Ashley, non-easy job. But I do have some experience in this space, but on the COO side, my last firm, we did a successful exit at private equity. But Chad has some really great experiences in the public and the public markets as a CFO. We want to spend more time. What does that mean? And learn from Chad's experience. Do you want to introduce yourself a little bit?
Yeah. I much like Dave, 10 years out of school, and y'all weren't supposed to laugh that much at that. I mean, but in those 10 years, I've been incredibly fortunate. The opportunities I've had for somebody that graduated from Nobody Cares University, had really bad grades in college, and started out as an AP clerk. I've had incredible luck to get to this spot and been able to see a lot of different things. And, I guess probably 2 days into being an AP clerk, I realized real quickly I have more to offer to the world than keying in invoices every day. So, passed my CPA, went into public accounting, moved over to Coopers & Lybrand, got up to PwC, left as audit manager. And from there, you kind of got to make a decision, right? Am I going to stay in public accounting, or am I going to go do something else? And I looked around, and everybody that was the partners that were in their, mid 40s, low to mid 40s, looked old. I look old now too, but they looked ragged, I would say. And so I chose to go into the private sector, if you will, and have enjoyed it immensely. Really good experience with some companies that I wish I'd say I was all me that was choosing them, but it was a lot of luck along the way that we got some really good exits, both from a M&A perspective as well as on both sides of M&A, but also doing IPO, follow-on offerings, convertible debt, and most recently we did a real nice little transaction with a large firm as well. So it's been great, and very thankful to be here today.
No, thank you, Chad. I want to, and I guess I'm also very thankful to be in my seat too. We've both had some good luck in our lives.
Yeah.
You've been the CFO at Findhelp for some time now, and you've been able to scale up their finance function. Mm-hmm. Probably what are the things you're thinking about in prep for a future exit? What are the things that really you focus on in the finance function within Findhelp?
No. So we Findhelp joined in 2022, and when I joined, it was still kind of that transition stage where people were still more focused on top line growth. What are you going to do? We were ready to go out. We were burning $2 million a month. Our CAC payback in months was like 15, 16. Our rule of 40 was negative 56. And, but we were growing top line like 40, 45%. And so, there was a time when everybody would kind of look aside from that, and they would say, okay, yeah, they're still growing, let's go do that. But we were growing 40, 45% on, 12 million, 15 million. That's very different than 40% on 30 or 50 million. So we got our teeth kicked in, to be honest with you. We went out and we got a lot of those calls. For those of you that are here that are investors, you send that email that says, hey, do you have some time to chat? And then we set up time to chat, and you tell me, we love what you're doing, but. So we got a lot of those. And, that was kind of that pain. At some point in time, the CEO finally just told me, I can't take another call. If I get another email, I'm going to send them all to you. So that's fine, whatever. But so anyway, long answer to your question. What we did is we took a step back and we realized, one, we got to do a couple things. One, we have to make sure our employee base understands why Rule of 40 matters, why revenue per head matters, why CAC payback in month matters. And we took some time to just explain that to them. And once they understood the why, that kind of got that foundation, like you guys were talking about earlier, the foundation underneath for an acquisition. Our teams knew what we were trying to do. They didn't necessarily know, hey, we're trying to go raise money or we're trying to do some things, but they knew why it mattered. If I'm a level 1 support individual, what it mattered and how I impacted the financials. And so once we did that, we educated the employees, we could then start focusing on, which I think is where your question is going, a lot more things that we tried to do to get ready. So we had to make sure our models were simple and easy. We had to make sure, and financial model. When I was, interviewing at Findhelp, one of the board members told me, I hate our financial model. There's too many tabs. I can't figure out what's going on. I can't understand it. And then when I got to the company, the VP of finance said, we have the best finance model I've ever seen. And so I quickly had to merge those two perceptions together. So we had to dial that down. And what we did is we built a financial model, and the model we went out to most recently with, it had 4 tabs. That was it. And that was our financial model. And then we also built a customer cube. And that customer cube was very detailed. It had every customer, had every vertical, had every, if you want to do by geography, whatever it's important to you. We had that ability to show by month what happened and what trended over time. And that was incredibly important. So we could give them a model that talked about the financials. We could then tie into the customer base. And those two, that answered so many questions for so many people up front. And then third, one thing that's really important to me, we can spend more time on this later, but you have to be timely in your response. And your team has to know that we're going to answer things quick. It doesn't mean you're going to answer things in an hour. A day is fine. But if I can't get to something in a day, I'm going to tell them what I can't get to it, or what I can get to them, or what the reason is. But it has to be timely. And people have to know that. You can't, the longer that delays, the more other issues that creep into that situation.
Chad's been lucky enough to be part of a public IPO offering. He would do it with Q2E banking. From having done that before Findhelp, what lessons did you learn in that experience that you bring to Findhelp, prepare them for the next round?
So one thing I loved about being a public company is that your reporting metrics, your world, what's important gets brought down a little bit, right? So that now the company truly understands what drives the business. You're not going to have, if you're VC backed, P's a little bit different. If you're VC backed, you're going to have a board that's probably anywhere from 5 to 15 people. They're going to all want different things. They're going to all want different metrics. And so you end up creating all this, I call it thrash of just data that just gets reported out that nobody really cares about. But as a public company, you have to dial that down to what truly matters and, what you're going to be willing to put out there and say you're going to go do. And if you could take that and bring that to the private company, which we did at Findhelp, we really kind of brought down to, and it's why I love the SaaS business too, is there's one point that drives everything within that business, and it's your bookings, right? And if you know what your bookings are, I can do everything that happens after a close, and I can forecast everything that needs to happen before that close happens. And so you can create that circle. And that kind of mentality with folks, I think really simplified what we were trying to do, because it brought everybody down from a reporting perspective of, well, all these people need these other things, but okay, this is what really matters. And that is what we still had to do some of the things for the board that we otherwise wouldn't have done. But the key was to get the true investors to understand that's what we're trying to do.
Yeah.
And that was important.
I bet. You're lucky enough to have covered both sides of the coin, which very few people have as a CFO, a private recapitalization and a public IPO. Can you do a little, this is because you're here, I'm going to ask, compare and contrast.
Public IPO to
public private recapitalization, strategic, whatever.
So I'll say, 10 years ago, the IPO was a lot worse than the like a private investment recap, whatever you want, majority recap, whatever you want to do. The most recent one we did, that was it was a majority recap to some degree. From a diligence perspective, it was double what our IPO diligence was, if not more. It was there was financial, there was legal, there was insurance, there was technical. There was everything you can imagine. We had well over 700 asks on the due diligence list in that process, and it was a full exam, if you'll say. So I think it's changed a little bit. I don't know if I'm sure the public markets are still close to that, but I think private today is is not any different than a public one really is going to
That's
be.
really
You got to
interesting.
be prepared.
Not a scripted question. What do you prefer being, a publicly traded CFO or a private?
I like aspects of a public company. And just to clarify, when I was at the public company, I was at the CFO there, but just to make sure people know, but I still acted. But still, as a private company CFO, I think there's pluses and minuses of both. The things I did not like about public company things were the beat down of every quarter, everything just happens, and you do start to lose focus on what's important. You get a very short-minded view of things. Q2, one of the good things we did there is our CEO and founder still did a real good job of keeping the company focused, not on what we're going to do the next 3 months, but what are we going to do the next 9 or the next 18. And that's hard to do as a public company. It's a little easier to do private, but public, it's very challenging, I bet. So I think I gave you a very political answer that basically told you nothing.
No, it was very good. No, it's very interesting. And we may get some more questions at the end about that. Switching back to, many of us we're all in the privately held space, and might be interested in an acquisition in the future, or someone acquiring you in the future. It could be financial, could be strategic. You as the CFO, teaming with the CEO, how early do you start building relationships with potential partners, markets? What signals do you use? What's your strategy?
So I don't think you can start early enough building relationships with potential investors, because you're going to get married to these people. So you need to make sure you get along, and you need to make sure the way they think about things, the way you think about things are similar, but also it gives you plenty of time to build that relationship such that, before you're actually starting to go out, Dave, you're starting to make it real serious. I can feed them data that I want to feed them. I can control the narrative. I can tell them all the positive things. I can give them little quarterly tidbits on customers that, hey, we won this big customer, or we won this, whatever's public. But I can also give them some things that may not be great. Like it may be a little bit of a wart, if you will.
Yeah.
But it builds that relationship of trust with them. So I can do it in a very managed kind of just careful way, but I build that trust. And I think you need to do that because there was early on, this is like early 2023, sometime 2022, one of the really big PE firms started calling, and you guys would know the name. When they called, I was like, okay, great. This is a really partner we want to talk to and we want to spend some time with. But the more we spent time with them, I didn't like them. And it just wasn't going to work. And so but it got to a point that now suddenly I got to do hey, we love what you're doing, but we're not ready for this. And so that was a nice little turn. But that relationship, it's incredibly important, because once you do make hey, we're going to start going out, now I pick up the phone and I call, here my contact is, and I tell them we're going to start this. And they're excited. They know about us. They know what we're doing. The diligence is going to hopefully be a little bit easier. But, it makes for a much easier game plan if you've done that.
How do you balance that responsibility with the CEO? Because the two of you have to be in tandem, but how do you come together? How do you separate the work?
Yeah. So the way I like to think about it is I want to be very strategic with the CEO. Like I want to bring him in when I need to really put a hammer down on something, like, hey, this is why this is important. I don't want to bring him into every single call. I want to bring him in, just kind of feather him in a little bit so that they get really excited and they understand, hey, he's very knowledgeable about this subject, and he truly is the leader of this group. So I try to do that very thoughtfully, if you will.
Yeah, that's appreciated, I'm sure.
Yeah.
So there are multiple stakeholders in these discussions. You've got the C-suite, you've got the board and other investors. You've got a business that may be wonderfully, and it's in different types in the exit or in the hold period. Yeah. You've got, financials that are green and financials that are not green, right? The warts.
Yeah.
How do you balance all that and bring everybody together to get to an exit that, how do you, that's a hard job.
And I'll give you a real life example here. We struggled a little bit at Findhelp with some of our investors that, a couple of the board guys that wanted to be involved in the transaction. And I understand, they wrote a big check. They want to be involved. But what you can have, for me personally, I can't have an investor, potential investor, or somebody that's looking at us going to them and asking questions that I'm not privy to. And same thing with the CEO. And we had an investor that we told, I can't tell how many times, every call, we'd tell them, if they reach out to you, you don't respond. You tell them to reach out to us. But this individual wouldn't. And they kind of shot themselves in the foot, because we had, before we did this most recent raise, had been in talks with a kind of a one-off type investment. And this individual started reaching out to that our investor, and asking questions. And basically the message that came across to the potential investor was, they just want out. So what that meant was the value was super low. And, so we were doing all this work, we'd been building this relationship for a year and a half or so. And then they gave us a term sheet, and I called the guy and said, hey, what gives? I mean, this makes no sense at all. And he said, well, we were talking to X, and I think, they just it seems like they want out. And I said, well, that's not how this works. And so we ended up not doing a deal, which pushed it out, which worked. But at the same time, we could have been done a lot earlier than what we ended up being done at a much different valuation. So, however, you just have to have that, and they've got to be on board.
Yeah.
It's just a tough world, but you got to manage it every day with them.
Have you leveraged a banker as part of the process, and how does that help, or not?
So I think bankers are very valuable depending on where you are in the process. If you are, if you're wanting to trying to think about how to say this. So if you're going to do it by yourself, you can probably get it done. It's going to be very challenging, because there's a lot more work that you've got to do that a banker can probably help from a negotiation perspective and do some things with you. But if I'm going after a certain level of, be it PE firm or whatever it may be, sometimes you need a banker, right? You need somebody that can talk at that level with them and tell them, F off, I'm not giving you that report, right? Whereas if I, the company, tell them that, sometimes that doesn't come across the same way. So I like a banker in a larger situation.
Yeah.
I don't necessarily like them in the smaller, because it is frustrating to write them a check, and you're like, well, I'm not sure you did that much.
Yeah. As you go through exit planning and you start thinking about the right next firm, which you just got some funding at Findhelp, how do you select that buyer? Is it, obviously the size of the check matters, right? But and who makes the decision on that? How do you think through that? How do you try to find that pretty partner? I'm not sure HR's in the room, but the partner that you want to date, that's the person I'm falling for. How do you, when they may have the most money, they may be the best culture fit, they may have the best strategy, they may want to invest. How do you figure that out?
So I think it goes back a little bit of the conversation that was happening before, that alignment that y'all were talking about from a internal company perspective. That's incredibly important. If you're a founder-led business, or you're maybe slightly different than that, what that founder wants, or maybe that next generation CEO wants, are probably going to be different. And what the person that they want to come on board with them is probably going to be a little bit different. If that founder, if he wants, or she, if they want somebody that's just going to come on board, give some capital, making sure it's available to kind of drive you to that next level, that's a different, your VC kind of growth type view. If you want somebody that is, hey, I want somebody to help me. We're at a stage that we don't necessarily know how to go to the next level. I think that's when you kind of are thinking about a different investment. Yeah. And I think either one of those are fine, but you got to make sure, if you don't know that going in, you're going to go talk to every VC, every P, because the minute, no matter how quiet, you try to keep it. Like, oh, we're just only talking to 10 bankers. You'll start getting calls from everybody. Hey, what are y'all doing? And, you know, and every one of them will tell you, even if it's a giant PE firm, oh yeah, we have a VC growth arm of the business that will invest in this. But you know, you'll get 3 or 4 calls in and suddenly you're just talking to the PE people that want to buy the company completely. And, you know, then you have a complete turn of a conversation that you got to try to right the ship a little bit, if you will.
Yeah. That's a lot of fun.
Yeah.
From a finance perspective, we talked about, you had 700 questions in your last piece on diligence. You also, have to worry about the Q of E. What are the areas that are like critically important, and what are the areas that you've got to avoid pitfalls, because it's going to be a problem from a commitment perspective?
No, that's a great question. And everybody has warts. Every company has. Nobody's perfect. Thank you. That was exciting. It's like a celebration. Celebration of warts.
We sold the company.
Yeah. But everybody has them. And, you can take one or two approaches. You can try to hide it and try to kind of, hey, look over here, look over here, look over here. But these people are smart, and it's kind of that cockroach theory, right? They're going to find one thing, and then they're going to look for all the other cockroaches, and eventually they're going to get to what's wrong. And, if I control that narrative from the start, and I position something that maybe our net revenue retention dipped a couple quarters and came down for certain reasons. If I can control that narrative from the start and tell them what happened and why, that's so much better than I give them my customer cube, they go through everything, and then they start digging into why did something happen, and then they start going into why is that customer wrong, what's wrong with the whole vertical, what's wrong with your go-to-market approach. Suddenly I have a ginormous issue I have to deal with that if I had just addressed it from the start, it would have been an open and shut case.
Yeah.
So I think addressing your issues up front is critical, but then also, simple model that people understand, and that customer cube that, details everything that happens with your customers for somebody, good and bad. And if you've built that relationship we were talking about earlier, now when I start bringing up the warts or the other issues, they're not that big a deal. Yeah, they are an issue, but they realize, hey, I understand it and I know how to get over that hurdle.
Yeah. Related, as you help corral the troops, those ELT, whatever you want to call it, through this process, how do you coach them of what are the things that they might underestimate? Like, you got to do a market study, you got to do a Q of E, you got to do technical diligence, you got to there's a lot that's coming. It's coming, you've lived it, you've breathed it. How do you help prepare them for it, and what areas you think they're going to underestimate? The timeliness, the late nights, the too many steak dinners or salmon dinners, and speed dating. I mean, which piece of it's the most concerning thing that they've got to get ready for?
So I think you're a couple things. One, I like for the rest of the ELT or C-suite guys to know that we're going to contain as much of the activity as we can. Me, the CEO, the CFO, maybe one other individual, we're going to contain as much of that as we can within our group. We're going to pull you in whenever we need it, and we're going to make it very targeted. And I need you to come in and just, answer those questions. You're probably not going to give a bad answer. Don't worry so much about it. A lot of people panic and, well, I don't want to say something that's going to blow something up. Well, unless you've committed fraud, we're more than likely not going to cause any issues. So we're pretty good. But what I need them more than anything is I need you to focus on the business. Because the minute I bring them, if they start getting too excited about a transaction or a deal that's going to happen, and we miss a quarter, we miss our bookings, we miss adjusted EBITDA, whatever it may be, and then you do it another time, suddenly the value of your business is coming with it, right? And that's what I need them to not worry about it. I need them to just, hey, let me handle it, and I'll bring you in, and you just got to trust that we're going to do the best that we can for the business.
Yeah. It's a hard thing. I had an experience when in my last process. It was a successful process, but the enterprise value was much less than we expected, because we all got so excited about an early purchase. So it was an 18-month window, which was a fantastic window, but we were a good 100 million less than we thought it was going to crack, because we didn't focus, we couldn't hit a forecast to save our lives. We didn't have a CFO to protect us, who was smart and could have guided us better. And we put in, it was difficult, and we lost focus, and we got the deal done, but it wasn't the value we had originally hoped for.
Yeah.
How do you do that? Like, how do you've got sales and NRR and KPI. Like, how do you get them? Is there a way to keep, do that? And is there a way as a CFO, you help protect them from themselves because it's a personal event.
Yeah.
How do you protect and set expectations that you could protect you because some people will be distracted?
One thing we did is we just kept our internal metric and reporting cadence as if nothing else was happening. And so, like if we have a sales pipeline call every Monday, that pipeline call is going to happen every Monday, and it's going to be the same questions, same comments, same everything, as if nothing else is happening. Our month-end reporting, our financial reporting, everything happened. Those metrics, we continued to follow that piece. It's easier to say that, just as you mentioned, than it is in practice. But the more regular you can make that, as if nothing else is happening. That is one thing. The biggest difference in public and a private company, when you are doing IPO or you're getting ready for IPO, that's hard to keep under wraps. Like that really.
You file an S1.
Yeah, the internal company is really, it's really unique because the dynamics of that are, then people immediately start doing all the math and they start doing all the things associated with it. But then you get to tell them, you're going to be locked up for 180 days. So it doesn't matter what happens right now. If you'll hit your number, 180 days is going to be a much better day than if you don't. And so it's just kind of business as usual as much as you can make it.
Yeah. So we talked about how to do it like with sales and operations and whatnot. Within your own finance team, how do they do that? How do you get a finance team to do the month-end close, maybe do a bit of FP&A planning work, but also handle the diligence? Like, how do you have to add resource? Do you leverage a banker and maybe even your PE firm? How do you go through that? That's hard.
Yeah. So I'm not a paid sponsor for Consero or anything, but I do not like having an accounting team. Like I can do accounting, I'm sneaky good at it, but I don't want to do it. I just hate it. And if you can push that out to a third party, be it Consero, whoever it may be, and your month end is going to happen with like clockwork. I know my reporting is going to happen. I know all of that's going to happen without me doing anything, and it's beautiful. That means my team can be incredibly nimble, and we can work on all the FP&A, all the forecasting, all the diligence, and I can bring that accounting team in.
Yeah.
In this last transaction, the Consero team was they're instrumental in us getting stuff done, and anything that was accounting in general, I could send to them at the close of our day. We'd have it back the next morning, which was beautiful. So you've got that kind of 24-hour running clock, which worked out great. So the separation of those two and being able to focus my small team on the things that matter are crucial. If you don't, because I've been on the other side of that house where you have everything, you're trying to do all your month-end close, all your reporting, and the same people that are doing your month-end close, I'm having to go ask them to do all the other diligence pieces. Yeah. That's a nightmare.
I am really glad and appreciative of that comment. Like it makes my heart feel good. And I now know that if we ever did an acquisition, I wouldn't have to do anything. I would just let finance handle it all because they use the finance system. But thank you for that advert.
Yeah.
A little bit of this was all not about our age, but we're a little bit old school as we talked to. This is the way things work. And we did give us an update on how private equity changed. It gets one more detailed. We got to see, thanks to Louise and Ashley, they talked a lot about AI, right? Mm-hmm. Where in all these processes are you starting to see AI come in? Where could you see it go in terms of like the VDR, the data room?
Yeah.
Any of the process points analysis is probably going to make our lives worse and better at the same time.
So I think, and one thing that we've just started to do was with our customer cube, we now take that customer cube, we load it into Gemini every month, and it spits back. We have like 10 prompts that we asked it, and it'll spit back that data with us. So all that analysis, so we can do that with our financial model. I would think on a go-forward basis, if you don't do it, the bankers are going to do it.
Yeah.
The minute you send it to them, they're going to drop it in there and come back with all the analysis. So if I can do that up front and I could send it to them, and then I could even add value on top of that, not just a bunch of cool little charts that Gemini created or Claude, whatever it may be, I think that'll be invaluable on a go-forward basis. And, my team, they're super excited about it that, you can do that. You could also build sales pipelines or sales forecasts. You could do all kinds of modeling now that if you've spent some time into it, you can still have like a day or whatever to reply, but you may get your answer back in like 10, 15 minutes. And then you look like a wizard, right? You just kind of relax them.
That's great. In theory, makes life easier, but also the people asking questions have Claude on their side, and they can start asking more questions. So 700 might be a small number going
That's right.
forward.
Yeah.
Chad, you've been an amazing guest, and your experiences in the private side, the public side are unique. And I know I've learned from this, but I want to use this time to open up. We've got a lot of people that are interested and might be going through different parts in their model, whether they're just started with a new hold in a company or they're starting to think about it, or it could be a week away. Who knows? What kind of questions does anybody in the audience have to ask Chad?
Why do you think that the now private sell is just as many questions as the public? Like, what's changed to cause that?
That's a good question. I think the world is kind of shifting, right? It's not, used to be, that's the West Texas in me, sorry. Previously, you could go public at about, less than 100 million or on a path to 100 million. You can't do that anymore. But there's so many other exit opportunities now available for companies that aren't just the IPO, right? The private world is so much different. The PE world is so much different. There is so much dry powder on that side of the house that people are ready to invest that it's almost like that's become the public market for a lot of these companies. And so I think their investments are much larger as well. They're writing much bigger checks, and with that comes a lot more responsibility.
Yeah, for sure.
And it's kind of a fun world to be in, I think, in that regard.
So that's great. Any other questions? Yes.
So when you're thinking about growth, for exit planning, for investment rates, or whatever it is, there are a lot of different segments, different areas that we have to look at. We have to look at sales, you have to look at finance, you have to look at HR, tech, all these things. What do you deploy to be able to have all these areas speak to one another in a cohesive way so that you can be rolling the same direction?
It's a great question, and it goes back, kind of at the intro when I was talking a little bit about, we had to take some time to educate our employees, and I took a lot of time to just make sure people understood revenue per FTE, like what that meant and how they impacted that. And you guys are gonna laugh at this too, but in 22, when we were trying to raise money, our revenue per FTE was 82,000. Like, so, I think most of you in the room know that's not a good number at all. And but we wanted people to understand you need to be 200 plus. We need to be 200 plus as a company. And so that made teams, HR, finance, R&D, engineering, whoever it was, they suddenly understood when they were asking for new resources, how's this going to impact my revenue per FTE? And one of the proudest days of my life is when, this is sad, but it is proud, but at work, when an engineering individual, kind of an L1, L2, whatever it may be, says something about adjusted EBITDA to me, or makes that comment. I mean, that is a proud day. That's like, all right, that's pretty cool. But I think it's just that simple for us, is we got to a revenue per FTE for folks so that they could truly understand how it impacted it. And then everybody's running from they understood the why, and once they understood the why, they're making decisions on their own. And people are smart. They're a lot smarter than I am. And if I can help them with that baseline view, then they're starting to make the right decisions.
Thank you. Any other questions?
What do you think drives the most value in an acquisition? Like, how do you get the biggest in here?
Well, if everything's right, all the metrics are great. That's a good place to start. But I think the world has shifted. I think growth is still very important, right? That top line growth, but if you can knock out 20% growth, and you're rule of 40, if not 50, maybe 60, and your revenue per FTE is really good, and your CAC payback is really good, you're going to drive a lot of value. And, you know, where it used to be kind of the reverse was, if I'm growing, you know, 50, 40, 50% at, you know, damn everything else.
Yeah.
You know, it's just, screw it. I think people have wised up to that doesn't work. You know,
They're fun days though.
yeah, they were, well, yeah, it was fun until we got our teeth kicked in. But you're right. It was kind of that weird world of, you know, everything's trying to grow top line, and then people realize once that stops, that suddenly you have this giant, you know, anaconda that's got to eat an elephant. You know, that's not going to happen.
Yeah. Good question.
Mm-hmm.
Anyone else? Okay, well, I want to say thank you to everybody, especially Chad. This was really, really helpful. I hope you're at the game that looks like it's sort of not raining. No, foggy out there.
I'm a Mets fan, so I just got to tell you, this
Let's go Rangers.
it's
Let's
going
go
to be
Rangers
just as
tonight.
painful for me.
Rangers.
Yeah.